Hey, what's going on, everybody? Welcome to this week's weekend prep and review for October 26th to October 30th. So, to kick this off, it was another, I say, choppy week in the markets. And I finished the week once again negative, as you can see from the thumbnail you clicked, but mainly from obviously this big loss. And then these were hedges, but I'll cover all these here in a little bit. But I ended the week minus $414. So, which isn't bad because that's less than 1% of my account. So it's manageable. Right now, I would say the goal of trading should be to preserve your capital because of the uncertainty in the markets with elections and stimulus deals. And got COVID going on. Yeah, so it's just all around choppiness. And so yeah, let's go ahead and get started. So what I do on the 20th. All right, Netflix. This was a earnings trade, as it says right there. I played the expected move, and so basically, when I entered the expected move was $40. And so I sold the 565 call and the 485 put, wanting price to stay below. And then as earnings came out, it obviously dropped and actually fell all the way down to the $40 mark on the time I entered. It kind of bounced, but obviously bleeded throughout the week. Anyways, nothing crazy or exciting to say about that one. Nonetheless, made after commissions, made about $80. Nothing spectacular, but nonetheless, it's better than a huge loser. So Netflix, and okay, I have SPX and NDX. Those are two hedges I put on. So like it says right here, all right, I guess that is going to go right there. It's not going to let me move it. All right, whatever. All right, so what I do here. All right, 11 days till expiration. Bear calls paid for $3. What I did was this blue line right here. Whoa, let's decrease that size some there, yeah. All right, that sign right there, that's my break-even point. So what I did do was I sold an out-of-the-money bear call spread. So I sold the 3,550. So my break-even right there. So I want price to stay below. And the reason for that is obviously I have the yellow 10x bars. And one main reason that I wanted to do it was we got back below this fib level. So obviously it came down. We bounced off the 618. We closed with the wick on top of that one, and now we're going back down. So I was thinking, all right, time to put on a hedge. Like this says right here, I'll go ahead and enlarge it for you. And so right here is the weekly, daily, and then the 1 hour. And like it says right there, price fell, like my notes that I took right there, price fell below the 786 fib level. And then these dark blue bars are called early out signals, so therefore momentum is starting to die off. So to me, I was expecting a retest of maybe this tree line, which is that green dotted line that's right here. It's kind of hard to see on that chart. Maybe it'll be better on another one. That or maybe the 21 EMA or the 34 EMA. So that was my expectation. Obviously, in hindsight, it would have been better to hold on longer, but I closed the hedges whenever we did come. So we obviously had a bigger red day right there, came all the way down, retested the 786 level, and here is the 5-minute chart right here. And you see it held and it started to go up. So therefore I closed it. I didn't want a hedge to become a loss. or a big loss. And with the way the markets have been, it's very difficult to predict what is going to happen. Obviously, right now, in hindsight, it's easy to be like, oh, I could have held on to them. But at the time, for all I know, could have hit the 21 EMA and then bounced right off. Anyways, like I said, it came down and I closed it at the target, which was the 21 EMA. So that was a after commissions, a $224 winner. And the same goes for the NDX, almost identical. Same thing, yellow 10x bars, momentum is slowing, bouncing between the fib levels. So yeah, bouncing between those fib levels right there. And same as right here, dark blue candles right there. The 1 hour squeeze that is forming up right here was looking like it was going to fire short. And it's obviously making lower highs. Just stepping down. And then, just like on the SPX, hit the 21 EMA, so therefore I closed the position. And made another about 220 bucks-ish on that trade. All right, so that was the hedges in my Netflix trade. That's when I opened Netflix. And all right, the 21st. What we got going on here? Okay. All right, I already talked about Netflix. I closed it. NVDA, I'll cover that here in a minute. I'm going to cover my closed trades, and then I'll cover the trades I still have, and we'll evaluate how they're currently doing. All right. And then TTWO, I believe is take two. Lost almost about $1,000 on that one. And I did slightly mess up on this one. It's kind of annoying, but I did catch what happened. All right. So at time of entry, so my EMA is stacked positive, VWAP stacked positive. Price is obviously kind of stair-stepping up, consolidating. It's at the 21 EMA, and this dark blue line that's right here, that's the 50 SMA. You see it reclaimed it. I'm like, all right. I've been watching this one for a while. So right here, this is my squeeze chart. So the EMA's got back stacked positive again. There was a squeeze with momentum above zero. That entered as a dip near the 21 EMA, which is the white line right there. So that's what I was expecting. And then what happened, I closed it on this day, so you could see that. So this is the day I entered. It was looking good, sold off, and then we just obviously kept going. Usually my hard stop is a close below the 34 EMA. So I took the loss. But where I messed up is, let me pull up my current chart for you. This is where I messed up. Oh, no, not RH. Okay, where I screwed up on this setup. Okay, like I said, this line right here, this purple bluish line is a 50 SMA. Anytime stock or a price gets below that, I usually cut it. Because usually hedge funds will no longer look at the stock if it's below the 50 SMA, and or so I read anyways. Anyway, so I got in on this trade. We're looking good, and then closed below it 3 times before I closed it. As I didn't even look at this chart for some reason. I was just looking at my squeeze chart, my 10x bar chart, but I should have looked at this one because right here closed below the 50, tested the 20. Right here it closed below almost all of them, and I should have closed it on that day, but and had a smaller loss, but instead. And look, you see the buyers came back in, but this entire candle was red whenever I closed it. So anyways, mistake made, lesson learned, no biggie. Got to keep on learning and growing and identifying your mistakes. But that's what happened with that one. But no big deal. And that is all I closed for that week. All right, so now I'll go to the trades that I am currently in, and we'll see how they're doing. So I opened up NVDA. All right, currently in, I got a 9 days expiration bull put spread for 210. And one of these days I got using this epic pin thing. So I sold the 245 put and bought the 540 for $2.10. All right. So I was looking pretty bullish, like right here, got 10 or green 10x bars in all the larger time frames. So that means the ADX and DMI are alignment with positive energy or momentum. It's all green right there. We pulled back to the 20 SMA or 21 EMA, I'm sorry. And then I entered as I saw price was holding on this 30-minute chart on the 618 fib level. Right here, and if you're not familiar with this chart right here, this is my multi-squeeze tool. So what it does is it identifies squeezes on all the time frames, and then you can see what the histogram is on that time frame. So this particular chart tells me that there's a low compression squeeze on the 1 hour, 30 minute, 20 minute, a mid compression squeeze on the 15, and then it tells me if the momentum is, so if it's light blue, that's very bullish momentum. And then red is obviously momentum going down, things of that nature if you're not familiar with that. And I'm about to be having a video come out to show how I use this thing. But anyways, that's how you read this. So what I'm getting at is momentum is positive in most of the time frames. The earlier time frames don't really matter. But I follow the bigger ones. And I'll go more into that here in a little bit. And then, but you also don't pay, I don't pay attention to this chart right here because that's just a 1 minute. You have to have the smaller time frame. The way it works, the way this right here works, is you can only see your current time frame and above. So I put a 1 minute on so I could see what's happening on all the time frames. Oh, and also, so what I was going to cover is if you have multiple squeezes, usually if basically what happens is one fires, the next one fires, and then it goes, the next one fires, and then the next one fires. It's kind of like a daisy chain reaction. All right, and right here, my squeeze chart. So EMAs are stacked positive on the weekly chart, stacked positive on the daily chart. The 4 hour has them stacked positive with early in signals for the 4 hour. The momentum is lower, but I'm looking for this early in signal to turn the momentum up positive and we slingshot higher. That's my thought process on that. So that's why I entered. Has a squeeze on the earlier time frames and a 4 hour. There's not one on the daily, but it does have green 10x bars, and it's been a strong stock. Currently what's going on, and pulled to the 21 EMA. And the way it is reacting right now, so 34 EMA is always my stop. We didn't close below it, but we did come down and test it. Got another squeeze forming, so hopefully that would continue higher. What we will see. And another thing I was going to show you. So here's a risk graph. If you don't know how this works, I'll do a quick rundown. So you see I move my mouse, and if you look at this box right here, as I move it, it shows the price right. So my max loss is a little over $2,300. Max gain is a little over $1,600. And right here is the current stock price. And right here is the profit loss at expiration, which is this coming Friday on the 30th. So if price continues higher, be able to close it out for a profit, which would be nice. So it's reacting as we would like, or as I would like anyways. This blue line is my break-even point. This line right there. So you see we tested it right into the close. It closed at its high, so hopefully if it, like most stocks, when things close at their highs, there's kind of a gap up the next day, the next trading day, so maybe that follows through. But one thing to note is the 10x bars are now yellow, which means that you can expect sideways action. So we'll see what happens with there. But right now, all I need is it to kind of go sideways to up, and then I could close it and get on out of the way. All right, NVDA, talked about Netflix. Oops, sorry, click on that one. Okay, I opened RH. This is what I'm going to talk about. All right, so this one, I was eyeballing this setup for a while, and then when it got downgraded and gapped down, I was looking for a chance to enter. So, like it says, we have green 10x bars across the larger time frames. Obviously, you can see all the green bars on the chart. And once it got down to this 50% fib level, these dots right here indicate greater than 50% average volume at those levels. So that tells me volume's coming in at this level. And then we're starting to go higher. So I was all right, there's my trigger to get in because we may just retrace from the gap down. And then right here just tells me that the ADX is green. We're at the top. We're in the top 90% of the 52-week channel, and the EMAs are stacked positive. All right, my squeeze chart. All right, so we're consolidating all-time highs on the weekly chart. We have a daily squeeze with early in signals, which are these green bars. That's telling me that the Keltner channels are starting to flare out towards the Bollinger Bands, indicating a big move is about to happen. And so with the EMA stacked positive and the momentum positive, it says that you have a high probability of price going higher. So that's how that works. And this is basically telling you better get in while you can. So everything's looking good. I entered at the 21 EMA. And actually, I haven't even discussed what I did enter. So I entered the 377.50, 372.50 put. Bull puts red for that 230. So in there, this is nothing more than I put the pictures in there for the ATRs, the average range of the stock to move. And as of right now, this one is working out well, and so this is what I've been waiting for. So after I did enter, you can see that price did keep going down, and my stop was right here at the 34 EMA. And then we have the trend line right here that's going down, and once we closed above it, and then now we're going back up. We're at the 786 fib level, so we've completely made back what we've lost during the downgrade. And then if you look over here on the 5-minute, this is how you get conviction. This is one reason I love the 10x bars, because you can see the conviction coming in. So, like I said, all this, look at all that volume that came in. All those dots are greater than 50% average volume. So it just says there's fuel in the tank. There's buyers there to push it higher, and that doesn't happen. Like, that's not a very common thing. So it's like you need 50% volume usually comes towards the end of the day for the market on close orders. All right, here you see the volume came in going up. Right here, volume came in on the down sell. But then on Friday, from noon till the close, all that extra volume was coming in. So something to watch for if you're still in it. Still looks great to be in it if you're in the trade. Other than that, that tells me to hold on to the trade and see what happens. And we can look at the squeeze chart. And so also another thing to note is the squeeze, the mid compression squeeze is now showing light blue. That means bullish momentum is coming back in. So we're looking for this to come down like it did right there and slingshot higher. Same thing right here. We want it to come down and slingshot higher. And for this one, show the risk graph. So the stock is right here at this price, and every day that passes, this is going to get higher. This purple line is for the current day you're looking at it. It's just going to keep getting higher and higher until expiration. I can get the max profit, which in this case could be around 1,800. I'll close it probably about 80% or so, and then potentially have a decent trade on there. So I have RH, closed TTWO, covered NVDA, and next, oh, this is my SPX trade. That's right here. Nope, not that one. Did I enter in this day? Nope. Aha, there it is. Okay. So I have 8 days till expiration iron condor for 210. And then here I'll show you how I use this indicator, also called the weekly wires. And so right here it's just a risk graph of the position. And you see that I sold the 35.90 and sold the 34.10, and that's $5 wide spread. So that's how we're looking. All right, here's my thought process. All right. So things to note here. This green line, right, this green dotted line that you see right there, that is a tree line, a voodoo line from David Starr from his indicator of voodoo lines. So there is that line of support there with the 50% fib level, yellow 10x bars indicating sideways momentum. So there's that, and I'm expecting this level to hold as support as it goes into next week. Another thing when I'm doing iron condors, I consider if there's a squeeze or not, because nothing's more annoying than putting on a sideways trade when it blasts right through your other side of your trade. So I look there, there's no squeeze present, right? And then there's these dark blue bars on the squeeze indicator, and also right here, showing that there is no squeeze and momentum is slowing down. So therefore, should not expect a ginormous move up. It can, but the probability is low. All right, now I'm going to explain this chart in detail to you, because when doing iron condors, I really enjoy this indicator, and I'll show you why. So first, well, that's too big. All right, don't pay attention to this line, because that's not part of it. All right. Yellow. All right, so the way this works, so it comes in a bi-weekly and weekly, so you have 1 week and 2 week. This is my 2 week one. So this line that's right here indicates where price opened on Monday. So it'll be right there on that candle. All right, down here is L1. You see this green line? That is L1. And this line right here is L2. And then we have H1 right here. And then H2 is somewhere up higher. Now, what does that all mean? It's really annoying. All right. Guess we'll just have to deal with this thing in the way. All right, so what I do here? All right, so price was down. This dotted white line is the 21 EMA, and this purplish one is the 34 EMA. So I'm expecting price to hold right here because you have the 50 SMA, which is that blue one, the 34 EMA, the purple one, and then you have the green line, which is the 20 SMA. So anyways, long story short, there is a lot of support right here, right? And then we have the tree line and the 50% fib level. I know it looks jumbled up right there, but that just note that there is a lot of support there. All right, and so this green line, look right here, it says rolling 2-week periods analyzed. It says 268. That means this indicator analyzed 268 2-week rolling periods, which is a little bit over 5 years. So 5 years of data through multiple corrections here recently. The data is indicating that the SPX will, in this L1, which is, so here's the L1 data right here. And well, this part's L2, but the L1 data, out of the 268 weeks that this analyzed it touches L1 26.8% of the time, but closes below it only 13.8% of the time. And then it touches L2 only 12.3% of the time and closes below only 6.7%. So it says that the stock, or sorry, this index really closes below this line only, or below it only roughly 7% of the time. So how do I use it? So with the moving averages all right here, I entered the condor, and also this blue line up here is break even, and then this dotted same color line is break even on the lower end. So I sold these puts with the thought process of knowing that it only closes below L1 roughly 14% of the time. So with it only closing below this line right here 14% of the time, and all these moving averages and this fib level and this tree line, that just tells me there is a lot of things saying that the probability of the price going lower is pretty low at the time. So that is why I entered this condor. So it's a short-term condor, and then I have these levels of support. Those puts I sell, the premium is high because it's so close to the price. And then if it comes down below it, then you close the trade for a small loss, but your risk to reward is now skewed to be higher because you're entering at a level where which you believe price to curve higher. Now, and then I didn't close this, or I didn't sell this call up here at the H1, which, as it says right here, it closes above H1 about 36% of the time, and it'll touch it almost about 49% of the time. So, but the reason I brought it in closer is because with the market uncertainty and the election and all that stuff, I do not expect us to go to beat all-time highs. So I sold the call that is right aside above it. So going into next Friday, I just need the SPX to be in this area so I could make my for me to be profitable. Now, what's it look like right now? So like if it would have tested my lower end, like I said, I'm risking, at the time was $300. So we'll say I was risking $300 to make $1,400. And the way you do that, like I said, you look at this box right here, put it at my stop loss level. At expiration, it says $300, and then my max profit at expiration is $1,400. So that's a good risk to reward. And then my max loss, say gaps, news comes out about something, who knows, especially right now, then I'll lose $2,100, which is a small percentage of my account, so no big deal. So yeah, that is the weekly wires. And that is all of my positions. As for going into next week, what I'm expecting is, I don't know. I'm not going to look because I want to be flat by the end of next week. And I'm going to remain flat and remain cash until the end of the election because I think it could go either direction. And I want to be as flat as possible. And I know if I go searching for trades, I will not to do what I am saying, and I will enter the trade. So I am not going to look for trades, therefore I don't enter trades. And yeah, so that's all I have for this weekend prep and review. I'll put some links down in the description box if you want a discount for the weekly wires or for the 10x bars on steroids, which is how it shows it at the top of the chart, or the multi-squeeze tool with the multi-histogram, or the Squeeze Pro. I'll go ahead and put those in the description below, and you get a good discount from Simpler Trading. And so yeah, if you have any questions, please write them down in the comment section below. Subscribe if you found this content valuable. And yeah, good luck out there. Another red week in the books, but it's all right. Still profitable for the month, and the goal right now is to just survive. All right, thank you, and have an awesome rest of your weekend. Take care.